everybody. So today I want to go through a video which is close to my heart in terms of what I see other traders have been doing in my previous career. For me today, this is all about why traders get into trades early. Generally speaking, traders don't tend to get into bad trades because of their analysis. It's because their timing is wrong and they're getting in too early. The difficult part is at that time, it felt totally justified. So if you've ever looked back on any of your trades and gone, well, why did I get involved in that trade? Then this is going to sound very familiar. So generally speaking, getting into early trades doesn't feel like a mistake at the time. For you, it feels like it's being decisive in your trading. So number one, the real challenge isn't seeing structure, it's waiting for it. So once you as a trader understand market structure, the next challenge isn't spotting opportunities, it's waiting for those opportunities to fully form. Generally speaking, a lot of people can turn around and say it's laziness that's causing you getting into these trades early. It's not. It's coming from pressure. But there are three main types of pressure that traders face. There's the fear of missing that move entirely. There's the fear of being left behind whilst other traders are profiting. And then there's the fear that waiting makes you seem indecisive in your trading. So traders will act early, but not because the conditions are confirmed, but because it feels safer doing something rather than doing nothing in the charts. So let's understand why entry earlies are feeling right to you as a trader. This is the important part. The early entries will generally tend to align with momentum. You'll see strong candles, price moving with intent, the narrative makes sense, and it looks like price action is going to continue in that direction it's already heading. And because everything's lining up, getting in early just feels like the logical choice. But the markets don't reward anticipation, they reward confirmation. So when you're entering early, you're not entering structure, you're entering uncertainty. Now that might work, but it hasn't been proven yet. That's the difference. So what is it you're actually waiting for? So waiting doesn't mean waiting randomly. It means waiting for price to show evidence. So you're effectively waiting for pause, commit, and then confirm the intent. You'll find that structure generally forms after the market's shown its hand, not before. Before confirmation, price is still negotiable. It can still move in any direction. And that's where generally traders tend to confuse movement with intent. Just because price is moving in any direction doesn't mean it's confirmed yet. So common early entry scenarios, this usually tends to happen in two situations. Firstly, price will continue in a particular direction, and then traders will buy on the pullback, just assuming the continuation, but without confirmation. Secondly, price approaches a key level, and traders will enter before any structure has actually occurred. In both cases, the logic does seem sound, but the risk is undefined. And there is a big difference between where traders actually want to get into their trade and where the market actually confirms the trade. And that's where the difference is. It's patience, not intelligence. So what is the real cost of getting in too early on your trades? Well, obviously entering early doesn't just affect your win rate potentially, it also affects your decision making. You'll start tightening your stops unnecessarily because the trade hasn't fully proven itself yet. You end up becoming a defensive trader rather than a confident trader. Then, and I've done this plenty of times, you'll exit your trade early, all in the hopes of just protecting yourself from taking an unnecessary loss. And then, of course, obviously, price then continues without you. It's the typical sod's law. And because of that, your entire trade is just fragile from the very get-go. Not because your idea was wrong, but just because your timing was early. Here's a common misconception. Waiting is not passively trading, it's active trading. It's where traders tend to misunderstand patience in the beginning. You're not being passive by waiting, you're taking deliberate action. It's a deliberate decision. You're deciding, not here, not now, not without confirmation. And what you're doing by doing that is you're filtering out that uncertainty. Believe me when I say, when you miss a trade, it's cheaper than forcing one. Even breaking even is better than forcing unnecessary risk in your trading. This is exactly why I focus on structure and patience when I'm trading. The goal isn't to trade more, it's to trade when the conditions are clear. And sometimes that does mean taking fewer trades. I built a program called Spydaro that physically looks at the markets and uses an AI intelligence with back-tested data to look at the markets when structure forms in the right way. It then helps me with my entries and exits, but believe me when I say I don't trade every day. There's no point. You're looking for the right trades at the right time. If you have an edge, that's profitable trading. Remember, patience protects your capital. So just to close this out, if you're finding that you're entering trades too early, it's not because you lack skill. It's because patience hasn't been built into your process yet. And fixing that one habit can change everything for you. In trading, timing isn't being first. It's about being confirmed. Well, that's everything I've got for you today, guys. Thanks very much for watching. If you do have any comments, then please put them in the comment section below. If you'd like to see more about this, let me know. Don't forget to like and subscribe. It really helps with the algorithm. But yeah, if any questions, let me know. I'll see you on the next one.